All right. So usually before these kind of sessions, so let me see how many people are there. We have, where did this go? All right. So,
Wow.
yep. So usually before these sessions, I at least try to do some kind of homework as to where the market might go. But um, honestly today I haven't done any homework, so let's review it together. And it has also got one more reason, because of all the chop that we have seen. I'm honestly confused, but let's take a look at where we might be heading. So let me bring up this demo pro. All right, just give me a second. My son is crying, let me tell him. All right, sorry about that. Okay, let's get started. So the the quarterly expiration of ES has happened already. So now we are in the March series. So let's take a look at ES. And if you see here, the momentum has dropped significantly, and it's dangerously, it's firing downwards. Squeeze, right? So, but generally, if you see here, what happened when the squeeze exists, there was downward pressure, but in between we had massive rallies for 2 or 3 days, and then again we fell back. So if at all we are going to get, if you're not talking to me, go on mute.
Yeah. I'm gonna hold on. Why am I? Okay. Okay. I just muted, but that took the host from you, Pradeep.
Yeah, looks like that.
You can still try to. I think it would be.
I'm not able to. If I try to share my screen, it says host has disabled. So you need to make me the host again. Okay, thank you. All right. So if at all we are going to get any, Santa Claus rally towards end of the year, it has to be something of this sort. But we need some massive good news for that to happen, I believe, which we don't have as of now. But definitely, a small rally towards this 20 period 21 EMA, and then continuation downwards is definitely possible. And one more reason for that is, let me go to SPX and look at what happened to the gap. There was a gap here, right? From this day till here. We almost filled the gap on Friday, right? It almost got filled. Technically, yeah, we can still consider this as a gap fill. I don't know whether it will, or we might open low on Monday. Once the gap is filled, it is possible that we might slightly move upwards and then continue down further, right? So that is, I'm kind of see one thing. Let me mute everyone.
We saw you filming from the gate up to your door, and seeing the big fountain.
All right. So another thing here is the momentum. If you look at it on the way up, when it was closing above the Bollinger Band, the momentum continued upwards. Here we are closing below the Bollinger Band. We might continue downwards, but only reason for a small bullish view, in my opinion, is we are almost near that gap fill area. Plus seasonally, I think technically this will be the last week before the Christmas weekend, where we might see a small rally. That doesn't mean it will be a whole lot, a big rally all the way up to this trend line. I don't expect that, but a small rally would be good enough to short again into January, in my opinion. Right, so all the bullish structure that we had over here, it all got destroyed within these 4 days or these 3 days. Everything was destroyed here. So I am highly skeptical about a break above this. But if that happens, yeah, I think we should get rid of all the bearish trade ideas. If we clear this one, we might see a rally. The reason for that is there is a lot of churn happening in the market. Let me show you the Dow Jones Industrial Average ETF. Look at where it is. It has taken support at this 200 EMA, and this is a good place, in fact, for it to bounce. That is why I'm slightly expecting a bounce next week. And Dow also gave up all its bullish structure, but this is still, you can consider this as a bull flag if you want, because it has held this 200 EMA, and if this bull flag materializes, it can still go up further all the way till here. Okay, I don't expect a break of this new high, but it has come dangerously close to this new all-time highs. On the day, I think a day before Fed announcement, I think this was the day when we had the CPI numbers, right? So this Dow Jones was dangerously close to all-time highs. It's ridiculous, but that is the kind of market we are in. So extreme churn is happening. If you see some of the Dow components like Goldman Sachs, right? Look at this move, crazy. When nobody is looking at these kind of charts, most of the retailers are concentrated in Tesla, NVDA, Apple, all the tech stocks, but there is big guys are pumping something else. That's the kind of market we are in. Again, I think this again looks a very beautiful setup here. I expect this 340 to hold. So I think we can try to, if we open lower, selling a 340 put credit spread would be good, depending on what kind of premium we get on it. Let me take a look at that. Goldman Sachs. So if I look at, say, about 20-day, sell 340, about 272. But if I try to reduce it to 340 and 335, 150, still not a great credit, but this is something to keep an eye on, because right now it is almost $5 away from the ideal target price where we want to open that trade. So at that time, if you are getting credit of anything more than 2.5, I would be comfortable taking it. Right. So some of the Dow components is where the relative strength is. Let's take a look at Boeing. This is still a beautiful chart, but I wouldn't be trading in a bullish way here at this point. But this is where the relative strengths are. What else? I think Caterpillar. Somebody asked this in the group as well. This is still bullish. This is really bullish. So there is a squeeze. This is a perfect flag post, right? This is a perfect flag post and a flag here. Bull flag. This is textbook bull flag. So this is still strong. So I will not be surprised, if it goes to this 247 area. That's a fair enough target from here. From 232, another 15 points. $15 move. That's a good bet to make. DE, this looks like a short to me because there is still a gap here, and I think only if it comes to about 215, once this gap gets filled, that is when you can probably trade it in a bullish way. Otherwise, with falling momentum, this doesn't look bullish. Right, so I want to take a look at these two because somebody asked this in the group. How about UNH and JPM? Okay, that's a good. Those are good stocks to look at because those are also DOE components. United Healthcare. This is one heck of a stock when it comes to, if I look at the monthly, see how it is trading. It's as though nothing has happened to the overall market. This is just madness. I think this should come down. I would not be bullish at this stage on some of these stocks. Even though it looks good here, I think a carpet pull is due for this. And even it can fall in a straight line. So this is a weekly chart, right? It can fall in a straight line, even though the monthly chart looks great. It can make this kind of move. So I wouldn't be bullish at this stage in United Healthcare. But again, this is not a stock to go and buy puts on just because the monthly looks like this. Right? There are better stocks to buy puts on. So this is, for me, no trade. What is the next one? JPM. This is not good. I think this is a perfect bear flag. In fact, exactly opposite of what we saw. So this is on a monthly, right? So this is bear. This doesn't look good at all. But let's see weekly and dailies. It has come down a little bit. No squeeze. Yeah, daily looks really bullish. Daily is still bullish, but I think if it comes down to, and this is almost resolved here, this squeeze. So if it comes down to this level, about 127, and these stocks are, all the financials are heavily dependent on Fed decision. And since that is already done, and the next decision is going to be in February, I think this, if it holds 127, this is still bullish, in my opinion. We can look at selling a put credit spread around 127 if it comes down here. All right. What else? Let us look at some of the big cap names like we generally do. Tech stocks and the NASDAQ components have taken a real beating. And Apple is at a critical juncture here. If you look at it, this, this is a pretty big support. And the fact that we closed below this level on Friday, where the close was below these two levels, is definitely not a good sign. And also, even if we see a rally, Santa Claus rally in the next few days, I think this is still a shorting opportunity. Apple is going to bring down the overall market in Q1, in my opinion. One, I say it based on the chart. Look at this. Now, this is dangerously close to the big support it built over the last couple of months. These are all monthly candles, right? And it can easily come down to this 100 and where is the next area of support? If you consider this is the zone where it can come down to, all right? And which also coincides with this trend line from 2018 low to 2020 COVID crash. I think Apple is going to definitely come and visit this, and this will bring down the overall market, in my opinion. This is long due. One is based on the chart, and another one is based on my experience of buying Apple, the latest phone. I placed the order to buy iPhone 14 in the first week of November. Okay. So I think I placed the order on November 3rd or so, and I received my phone 2 days back. So this, I have never seen this kind of delay with Apple. I think it has all got to do with all those Chinese shutdown and everything. And what happens with this is anybody who has placed an order, say even on November 15th, all those orders, I think it will get fulfilled in January, and their billing is generally, all these companies, all the retailers, only when the product is shipped out, that is when they charge your credit card. Until then, it's not a sale. So it has to get shipped, and only then it is considered a sale. So their sales for the current quarter, the holiday quarter, which is the most important quarter, I feel is going to be disastrous. Okay, so because a lot of these sales, even if they have made a sale, it will get accounted for January, the Q1 quarter, not Q4, and their numbers will be really bad, I think. So that's based on my own experience of buying an iPhone. And also chart is clearly depicting that, right? If you look at the weekly candle, this is not good at all. So let's look at Microsoft monthly. Yeah, this is the kind of move we can expect in Apple, to be honest, around this red line, right? Let's go to Apple. Look at this. 117 is the current. This is the 50-day moving average on the monthly. So I think it is definitely due for that. And if I'm not wrong, there must be some big gap. Let me check the daily candles of Apple. There must be some big gap around. I think I need to go for a 4-year chart or something. Let's see. Yeah, there is a big gap here. Where is this? Oh, 96 to 100. Yeah, I think if it comes down to stop most people out, this gap can eventually get filled as well. And guys, if Apple comes down from 130 to 90 market, I think S&P will hit 3200. It will make a new low. Okay, Apple is the last man standing here. Everything else has given back the gains, right? So we saw Microsoft. Let's look at Microsoft daily. On a daily time frame, I still want to get in on the bullish side for Microsoft because it's one of the Dow components. In fact, Apple is also one of the Dow components. So, and it is only for the next upcoming week until, say, Christmas, whatever the seasonality, the Santa Claus rally that people talk about. I just want to be bullish only until then. Not I'm not a bull forever, and I'm not a bear forever. So I expect Microsoft to touch this and bounce, make a reattempt at this downward sloping 200 EMA, and then the hell will break loose, and this gap will eventually get filled. That's the playbook I want to go with for Q1, because a lot of these big stocks are already indicating that. Tesla, what a disaster this is. Let's take a look at monthly and then weekly. Wow, this is a complete U-turn here, a big head and shoulders, if you see, right? This is a big head and shoulders here. So how do you measure the move? If it is a head and shoulders, what you generally need to do is, let's take the closing prices. Okay, I'll consider, even though the bottom is somewhere over here, there were lows here, right? Let me go with the closing prices, which got held, and it got held even here as a support, right? So the way you can measure this is this has clearly broken the head and shoulders formation. So I want to measure from here to here and project it from here. Okay. So Tesla can go all the way to 102. That is going to be a massive drop, another $50 drop, close to $50, right? So, and that is where this is coming, and it doesn't mean it's going to happen overnight, right? This is monthly candle, so this might take, it might still rally. Don't hold me accountable at that stage. I'm still giving you a playbook here. It can still go to 208 and still remain in this bearish trend, right? And a rally from 150 to 200 is again a 50-point rally, $50 rally, which is again huge. And it can again come down and eventually meet this line over here.
So with the Tesla, I don't know if some of you had followed, like I was already targeting 150 as my first. Anyways, and my second was if it was $100. And once again, I can't say the time frame, right? But that's kind of like you start building value if you believe in the company. Not saying that I am. Like same thing with Baba. I have been saying this for 2 years. It took 2 years for it to go under 60. So that's when I build my position. So take this opportunity for long-term investors, what Pradeep is saying, like these levels that he's reflecting on, to scale into these positions, because don't wait for a big bang. The second you wait for a big bang, you're probably likely to lose out entering this position. You're just going to sit with the cash that you have, and believe me, that is going to happen.
Yeah, so this is still not a good place to leg into some position if you are a believer in the stock and want to be invested long term. And this could be your full position if you are able to take this, digest the $20 or $50 drop. That should be okay. I mean, depends on how much you're going to buy, right, at this stage. So just to keep an eye on it, you can enter it here. Again, there is every possibility that it can go to 207. I'm not ruling that out at all, right? So let's take a look at weekly. Yeah, this is if you see weekly, I think it looks overdone at this stage. So technical bounce is definitely possible, and with the seasonality and until next earnings, I wouldn't be surprised if it goes to even 175 or something, looking at this chart. Yeah, 175 is 21-day moving average. That's not a bad target. And let's see if it clears. I think we have to take it by the day, but this is a major, just mark it on your charts. The May low it made, that is the place to take bearish bets on Tesla. This is going to be a big wall on a monthly chart. This is going to be a big wall of China for it to climb. If it clears this, I mean, it's a good thing for the bulls, but this is going to be a big wall for it. All right. We looked at Apple, Microsoft, Tesla. Let's look at NVDA. This should cover most of the semiconductor stocks as well. And what a perfect bottom here at 161 retracement. I think we bought NVIDIA call somewhere over here, sold it for about $1,000 profit, but who knew it would make this kind of a journey? That, yeah, it looked pretty insane at that point with all the stocks getting sold off. But now this looks like a big resistance for it to clear this double top here. And it is going to continue the downward journey. In my opinion, let's see if you take this line. I think this is not a buy until it comes and tests this line again, or this 144, at which stage, at least 144, this green line, right? At which stage it can potentially look like a head and shoulders bottom forming here for a small bounce again. So, but until then, it has another $20 more to go on the downside. This doesn't look bullish at all. With the seasonality coming up, let's take a look at the daily. I wouldn't be surprised if it holds this 150, post CPI move, right? Where is that? Let me zoom in. We can see a technical bounce somewhere around, probably right here, if I'm not wrong. Let's take a look. Okay. So it can see a small bounce here around 162. So on Monday or Tuesday, if it opens lower, we can see Santa Claus rally back to this 200-day moving average and 80 EMA. And by then, if we are in January and near earnings season, almost all of these stocks, tech stocks, looks like a shorting opportunity going into January. What else? Any other ticker symbols that you guys want to take a look at? Does Apple, I think we covered Apple, earnings revision, etc. Yeah, earnings will be, I think, revised. Apple earnings, I'm not expecting it to be great. Can we buy bank stocks, call options for ER in January? Yes, because I think Goldman Sachs and JPM, because they're also part of Dow Jones, they look strong. And since Powell is out of the way, I think bank stocks are a good place to be, in my opinion, on the bullish side. So you can keep this as your stop loss and trade for a bullish move. Okay, 127. I think Goldman Sachs also looks almost similar. And I'm sure pretty much all Bank of America, all those things should be almost similar. Let's see, BAC. Oh, okay. This is not good. This is poor performance by Bank of America. And Citi, I'm sure, will be pretty much like this. It's always lagging. Yeah, still not bullish. You need to be in the quality sectors if you want to be bullish. Goldman Sachs and JPM is the place to be. What else?
There are a few questions in there. Guys, feel free to unmute yourself just and kind of
Okay, FedEx, Roblox, and Coinbase. Let's take a look at that. FedEx. This is again one of the Dow components, and transportation in general is looking good. Because, okay, although it looks like it is slightly underperforming Dow. If you look at the chart of DIA and compare it with IYT, doesn't look that great. But I think this is at a point where it can fill this gap and make a rally back towards 223 IYT. And FedEx also looks very much similar. And FedEx might go all the way to this 200. Okay, I wouldn't be surprised. Another 26 point move in FedEx, which will also fill this upward gap. Right, that is actually, this looks good. In fact, there is a squeeze. And when is the earnings? Okay.
Yeah, it is on Tuesday earnings actually, after closing on Tuesday. So
Guys, I think let's keep an eye on this. If it holds this level, I think our risk to reward is really great here. If it holds this 167 to 169 area, I think it can make a move all the way back to 197.
So is it better to add a 190 call for the next week?
No, you'd be paying a lot if you just buy a straightforward call with the earnings coming up. The premium will be jacked up. I wouldn't trade that.
I do see that 190 call is, like just 70 cents. It is not much.
What expiration?
This next week.
Yeah, but that's like buying a lottery ticket. You can try that, but soon after the earnings, it would have to jump $20. Otherwise, it is gone. 190.
Yeah.
And it is cheap for a reason, right? It is cheap for a reason. There is only 10% chance, 11% chance that it can make that kind of a jump. And for that, their earnings has to be really good, right? Unless you have some insider information, I don't think it's a good idea to go and buy 190 call.
190 call. Okay.
Let's wait for the earnings. See, if it makes a jump soon after earnings, well, we missed the bus. That's okay, right? There'll be another opportunity. But if it doesn't make a big move after earnings, and if it lingers around this area, that means it has stopped going down, which means there is only one way up. Right? We can trade for a bullish move after earnings, in my opinion. Okay, what else? Roblox and Coinbase, okay. Roblox.
So just to kind of go back on the FedEx, right? An average move or gap up or down is roughly under 4%. 3.5% to 4%. That's the max average move, or I shouldn't say max average move. That's like nothing, but an average move if you look at it. So If you are on the bullish end of this FedEx, then
yeah, if you
Yeah,
consider 3 or 4% move, it's $5 or $6, right?
Yeah.
From the current price, which is far away from 190. So
Yeah.
that's why, this is the mistake most retailers do. And I mean, in fact, I have also done it. And after losing money, you need to learn some things. So that's what I have learned. Okay. So it is cheap for a reason. This is like buying a lottery ticket. If
Yeah.
it works, it works. Otherwise, your money is gone.
So what is the implied move for the year?
See, this week's implied move is $12. So
Okay.
after earnings, if it doesn't move, can you see this? This is the implied move. If after earnings, if it doesn't, or by end of this Friday, by end of the week, if it doesn't finish up at say 171 plus 12 is approximately 183 to 184. That is the maximum move which is already accounted for. So after earnings, for your 190 call to make money, okay, it has to, this one, right? For this to make money, soon after earnings, it would have to go above this implied move, which means it should be trading above at least 183 or so. Granted, there'll be 3 more days left for expiration, but if it makes that kind of a move, good, your lottery ticket worked. Otherwise, it will not work.
Yeah, and that's an implied move. Doesn't mean that it has to move that much. That's just based on however they calculate it. That's what they are expected that it could move. It can move way beyond or way under. And if you see the 3 M's on that side, that's also another market maker thing that the plus or minus 10, they are expecting a $10 move on the yellow. There. So they usually are somewhere around each other. So here's I want to kind of take a small twist to it, because I do see we have a lot of people who join. So, and we can review the stocks and all that stuff all the time. What I really want to ask you guys, and please, I want this to be more interactive and as interactive as could be. So how do you how would you guys get the most value, right? Like some might be interested in FedEx, some may not be interested in FedEx. I may only want to talk about SPX or may not, but how does it add value to you knowing what you want to know? And like, well, how do you use it? Do you trade on a daily basis? Do you just do long-term investments? Like, what do you guys do? And what do you want to know based on that?
This is Srini actually. So what I do most of the time, I'll try to, like make some money, right? So most of the time, like I will buy some options like 2 weeks, 3 weeks expiration. And I will see that, like most of the time I will also use the stop loss. So sometimes it will hit the stop loss and we will lose that, like 20 to 30%. So it's depending on the stock, I will put that stop loss. Okay. And sometimes I don't use the stop loss, like last week, NVDA, I took, like, what is that, 175 call for 370, it went to, like $1,300. But I was waited, like to get into more, but I put the stop loss there for, like $900. Then I was out, like at 900. But later I took that one of the spread, but I put some other, like $300 again, but I did not make anything from that.
Okay.
So it is, like
more like so let me let
of the
me
time, yeah.
summarize this for you. So you swing trade, so you get yourself into swing positions. So one of the pain points that I heard from what you were saying is your stop loss is getting hit, right? And then and I'm assuming you don't do any kind of tracking of what you are trading on a consistent basis, what your position sizings are, and the true profitability, other than what you just see the P&L at the end of the year on your overall account, right?
No, I will see that every week actually what I'm doing it, how much money is lost and how much money I'm getting. I will do that, like every week.
Okay.
But most of the time, like I don't do much actually. So I know every day what I'm doing it, So I will do 2 or 3
so
trades.
far, just to kind of so far, has it been good, the strategy that you have been applying and profitable for the year so far?
No, actually. So as of today, I'm in loss.
Okay. So anyone else who so now if you guys get the idea of like, okay, I'm asking for the pain points that you guys have, right? So and what are you doing? What are you currently doing that we can help you, that we can assist you to make it better?
I think maybe a lot of times it's not about not knowing when to
Exactly.
take the loss and not, keep going or not. Because, with options, the price fluctuations always you hit your stop loss and then it just dips and then it goes up and then obviously missed out on a big rally or whatever that may be. So many times it happens with most of us. So I think knowing that limit of when to take a stop loss and walk away, or when to not keep a stop loss at times, which is deeper stop loss maybe than normal. So knowing those limits is always the biggest problem.
Okay. So what I'm hearing, so I'm kind of typing something on the side, right? Like I'm just kind of trying to do something. So you're one of the pain points that you were saying, and I think Srini also kind of agreed in the background that, the not confusion on the entry in the positions, right? So you don't know when to enter, when to scale into the position. And then the second portion would be that how much loss that you want to take, right? And would that be correct?
Correct. And then also, I think related to all of that is a lot of times people talk about, hey, profit is your own prerogative. So you take 10%, you take 50%. But then a lot of times having that understanding of saying, here's where the potential profit points are, right? Potential target 1 or target 2. Knowing some of that is helpful, because a lot of times then some of us just get out at 10% profit or 20% profit because we don't know if it's going to go up. And I've seen many times I got out of it 20% profit and I could have easily had 100% profit, because what happens is when you see the candles move up and down, you see a couple of green candles, you're like, great. And you see that first red candle
and then you
you're
panic.
like, oh, crap. Yeah, this is not going to happen. So let me get out.
Okay.
Right?
I'm going to get you. I'm going to get back to you. This one. Okay. Dan, hopefully I can get to what I want to get to with everyone. So if someone, anyone else, well, so there's only 2 people. There's at least 20 or 19 people on the call. At least like, let's get 10 people to interact if we can get that. If you guys are interested at that. I mean, I'm assuming you are, since you've joined. So Sailesh, Sam, Rajesh, Ravi. I'm just gonna call out people's names.
I encourage the stop loss thing. I've been stopped out a lot of times early, and I would want it. And it's the same thing. You panic. You look at it, it's going great, and then you see a red candle or a green candle. If you're on the downside, and it's like, yeah, I gotta get out. Right? And then I get stopped out, and sometimes like, you know what? I'm not gonna put a stop because I get stopped out. And then it goes down and you incur more losses. So that's one thing. I concur with that. And the other thing I've been I want to look for is, I want to do two different things, right? A small account for swing or a daily trade, but then you make a main account where you want to take long-term trades. So how do we identify those?
Okay. So what I'm saying is similar to what the couple people said before you, and then how to get into long-term trades or when, right? And then more so of like a scaling out issue also, that what I've heard from Dan as well, right?
Yep.
Okay. Well, Who else has something?
I think one
Hi,
thing.
Nick. Can you hear me?
Yeah.
Yeah. So my problem, I mean, I enter into the leaps. One leap I entered is the Tesla when it was like 1,000 before split, 1:3, right?
Mhm.
So I entered June 2023, 1,000 call at the time. Now it's 333. So I entered like $50 call. I mean, $50 is the when I entered like before split. So now it is like trading at $2. So I try to average. So I'm trying to get out of that position, but like looks like it is going down and down and down. Like just waiting for that point to come out.
Okay. So
Yeah,
once again, similar.
averaging the losing position.
Yeah. So just throwing money in the pit. Just kind of similar problem to when to take a stop. Like, right, when do you feel like, okay, this trade is not working out, and when to just cut the losers off.
Yeah, now sometimes it goes to a point where like you lose 80%. You don't want to cut down the loss, right? I mean,
You have to.
it's too.
Unfortunate.
too
That
it's
is the
kind
unfortunate truth. It's the bitter pill to swallow, but you will have to.
yeah.
So
I
like,
mean,
I have
it has
few
gone
points.
past the stop loss. Yeah.
Yeah, I have few ideas for that. See, most of the people who
So-
are trading
Hey,
options.
Pradeep.
Yep.
Pradeep. So what I wanted to do, because I think I'm going to see a pattern, and that's kind of like my assumption that there is the wheel of pattern, and then I'm going to hand it off to you. And then I think you'll be able to address these issues like all along, because I think we already do a lot of these, and that's why even when we do take losses, and guys, I'm not saying that we haven't taken losses in the group, that the premium group that we run, right? And once again, just to kind of throw it out here now, that we are going to open it up for free for the month of January for everyone. It doesn't matter, whoever wants to join, anyone can join, bring other people to join also. But there's a way to also gracefully take losses as well. And I'm just kind of trying to understand where you guys, like, what are the pain points that we can address like in the month of January, right? I'm not saying that we are going to make tons of money. That's the goal, right? But that's subjective for doing all this. But if things are going south, how are you controlling your losses? Like, when do you know that, hey, I'm going to cut this loose, or this is where I'm going to scale it out, or I'm going to risk this much because I'm willing to just risk it all at this point, because this is, I can afford to lose this much money, and I can still go to sleep and not have to worry about it, because on an average I have made so much money, right? So that's kind of where I want to try to understand to better myself. Let's just say that, like, let's this be a selfish call, right? So who else?
One thing I just wanted to bring up is sometimes worrying about when is the right time to get into a trade and which strategy to use. Sometimes that can cause confusion as well.
Okay.
Hey, Nick.
Henry. Go ahead.
Yeah, I mean, something that you've already said, and what Aman also just said, for scaling in, like you mentioned, like we may keep waiting. That actually happened to me during this particular the bear market rally, when S&P went close to like 3,500. I was reading, people were saying online, oh, it can go to 3,300, 3,200. It was already oversold, and they were saying, oh, the biggest losses can happen when it is already oversold. It can remain oversold. So I was waiting for 33, 3,200, and it started going up, and I kept waiting and I had the cash, but I didn't deploy it for swing or like I don't day trade, but swing or long-term investment. So how to scale in and also how to scale out, basically the two main things that everybody can learn from these interactions. Not to hold the losers too long, so how to scale out or completely cut the position, and when to see that it's probably a good position to start scaling in rather than waiting to go all in at once.
Yeah. So, anyways, so a lot of what you said earlier, like you've heard people saying that. So, one thing that I would just kind of address to that point is, the more and more people you listen to, the more and more confusion you will get. I myself, and I've said it very openly in my group, that I'm expecting S&P to go 3,000 and potentially even break 3,000. And that's just me. Is it going to happen? Maybe, maybe not. I don't know. But based on what I am seeing, there is a greater potential for it to go there. So you're not really missing out, and never FOMO, right? Don't FOMO in, but so you basically are agreeing with everything that has been said: timing of entry, scaling out, when do you take stops on positions, so on and so forth. Okay, so who else?
Hey, Nick and Pradeep, how are you, man?
Hey.
I'm also with the stop loss thing, especially for the credit spreads or the debit spreads. So if you can help out. A couple of days back, I had a credit spread for Google. It went all the way to 85% loss, but I said, hell with it, I'll hold on to it. And ultimately, I got out with 50% profit, but I could have got 100%. So just want to know how you figure that out. Thanks.
Okay. Who else? Anyone else wants to speak?
Well, something like that I did, basically not with options, but with NVDA stocks. I bought them around 140 as they were going down, and they went, they went to like 108. I didn't sell. I was selling covered call on them. But when they came back to like 145, I got out of them. And they ran up to what, 180, probably 178, something like that. So same things that we have spoken about. I think everybody wants to learn how to know when to scale in, how to scale out. Those probably looks like the theme.
Yeah. Okay. So
And,
Sam,
yeah, this is
We are all in the same boat.
Hey, Ravi, go ahead.
Yeah. So I am looking. My focus is mainly in terms of swing trading, in the sense like I don't get a time to take a look at the intraday moves of the market, but I typically focus on swing trading, and in that swing trading, probably a couple of days to 1 week or few weeks, like the October, if you take it, October, there was a good rally all the way till November. I participated in that, but did not take a large position, but it was a reasonable profit. But other things I was looking for is mainly the swing trading. In that swing trading, okay, so it could be futures or options, and mainly the focus is on index. I don't really focus much on any of the tickers, because those tickers will not be going anywhere for next to maybe 1.5 years. So they're all going to be participating in some kind of rally and coming back. So because the overall market range itself is around 4,000, if you look at it. So I was looking for basically on the indexes or futures on those indexes, looking for an entry and looking for an exit and looking for a stop loss.
You are at the right place, and for futures, Pradeep is your man. We'll get to you. We'll get to that. So your concerns is this possibly swing trades, and you are okay with futures, and not so much. You don't care much about the individual stocks. All right, awesome. Who else? Yeah. All right, we'll go a couple more people unless there are more people who want to talk.
Hey, do you provide any technical training?
What was that again, Srini?
Technical training? Like Pradeep was explaining the charts, right? So
Yes. So yes, the reason why I'm kind of taking over from Pradeep, and I already apologize to Pradeep. We do that every time we do this. We this is a similar pattern that we follow, but to me, I kind of wanted to get an understanding of what actually is the real needs. I'm assuming a lot of you probably who are trading and you come from the software end of the things, and you just kind of like trying to get an understanding of the user. Like, you guys are the users for me and Pradeep. So what do you actually like want? What are you really looking for? Right? Do you have time to do this, or do you have other issues that you would rather have resolved first before you move on to the next one? Right? That's just basically what I'm kind of trying to gauge. So Pradeep does the training portion. I am not very good at teaching myself, and I admit it. So Pradeep is actually an amazing teacher. So I kind of just lean on him to do all that. So we will do that portion, but I just kind of wanted to see if that could help Pradeep maybe address some of these things also, and maybe I can address them. So anyways, yes, to answer your question after saying all this, we do, and Pradeep will do it. I will do it also. Anyone else who wants to speak up? Okay, well, so I'll kind of just cover, and then I'll a high level, and then I'll hand it over to Pradeep. So you guys, if you guys are listening, you guys saw the common theme of like, okay, stop losses, then not knowing when to enter the position or when to take profits, and for long terms, like, or even long terms, or scaling out of your positions that may be already profitable. And so taking losses and timing the entry. So this is what I would say. And this is my 2 cents. And then Pradeep will hand it over. So for you guys, some of you said that you guys want, like, you want to trade indexes. So what we do, or what I primarily do personally, I only trade SPX. That's my that has been my every single trade that I have placed has been SPX, and some in futures, but everything is primarily SPX. I try to focus on 0-day because 0-day provides a greater amount of leverage overall, and then I don't have to worry about like whether this position is going to go against me, not. If it's going to go against me, this is it. And so we do provide the entries. I provide the entries as soon as I take them. And a lot of times, or I should say most of the times, people in the group, they do get better fills than I do, because I don't, like, when I see the risk reward that I'm risking, let's say, for example, $2 to in order my targets that we provide that are, and Pradeep, you can share maybe like our alerts and stuff. If you wouldn't mind. So we provide that to begin with, and we have the targets usually, that, hey, these are the targets for a lot of people who are working in this, and for example, like, hey, I might be in a meeting, I just want to know, like, what exit do you have, that I do post exit recommendation that this is where I would exit, and there's kind of like ongoing thing that we have always said, that if you have one position and if you are at 100%, get out, right? Like and then a lot of times the whole scaling out, like it's going to be a ongoing learning, because lately our group knows that 100% of the target, like 100% was always like an easy target, but lately I have kind of like being almost like half to adapt to start scaling out at 50%, right? So I know if I'm going in that I need to start booking profits at 50% to max 75% rather than my first exit at 100% that what it normally used to be, because these are different conditions and the market doesn't always remain the same. It will do crazy things and crazy unexpected moves. And because I've had losses on, I've had 95% profit and I've literally lost and the trade went completely against me to zero, right? So that has happened. So and no one is really immune to it, but it's just kind of understanding the strategy of like, hey, this is a time, these are the kind of volatile moves that are happening. I do need to start changing the strategy that I take profits from, right? So that's one. And all this comes in with not having a proper plan for exit. So we give optional trades also. That optional trades are basically, hey, you will have to manage the risk because it's optional, because it is a higher risk to put that much or whatever amount of money that there is, and then you take it on your own discretion. And then there's other trades which are like, hey, this is a regular trade. Everyone knows per every 10,000 you take one contract or two contracts or whatever, unless specified. So, and then so it's kind of based on that 10,000. There are some other improvements that we are kind of trying to bring in as we do, because as we hear things like, hey, I'm not having the ability to just consistently day trade, even though they would like to, then what is a workaround? So, there are multiple ways to do it, but it might not work. So those are some of the challenges that we also have. But Pradeep, listening to what they have now, if you could maybe even address these things while you're going over those things and the strategies that you apply for this, that would be awesome.
Sure, Nick. Let me share my screen again. Can you make me the host, Nick?
1 second. There we go.
All right, let me share my screen. Okay. So somebody asked about futures and how to manage risk, and a lot of questions. The concept is almost similar. Welcome to the world of trading. I mean, if you are having difficulty in taking profits or losses at the right time or the wrong time, it is bound to happen. That is what the market is here for. But you need to make sure your account grows no matter what. You might be wrong on a certain day, but you might not be wrong forever. Right? That much of confidence you need to have in yourselves. So it's more of a mental game rather than a technical trading setup after some point of time. So since most of you are aware of, I believe you are aware of cricket here. So Rahul Dravid is a great batsman. Tendulkar is a great batsman. But what is the difference between both of them? Like, who can endure a longer, a test series? Who can endure it longer is the question here. Are you blowing up your account, or are you here for the long haul? Right? You need to make sure that you are in the game no matter what. So when you make profits, protect it, put that money aside so that you don't again dip into it when you are wrong on some other day, right? So just to give you an example, on Friday, this is how we sent out the alerts. Friday, I said I want to buy NQ at 280. And what happened? It came here to, what is the low here? It came to 282. And it rallied all the way to 330 or so. So almost, sorry, I think it was around this time. So it came here, if I'm not wrong, which was 292, about 12 points away, and rallied all the way to 352, almost a 60-point rally. And then it came back down. Now I canceled my order because this is no longer valid. I wanted to enter here and exit here. Since I missed the bus, it's okay, I'm going to wait. And then I waited. What happened? It did not come to 280, but later in the day, it came to 280. And unfortunately, what happened? I had mentioned if this buy order doesn't get filled, I said I'll be looking to short at 380 and above. And guess what happened? It went to 380, and I think the high was 395. And I wanted to short it because it did not happen in the time that I wanted it. It happened almost towards the end of the day. I missed out on both the trades. I just kept watching the entire day, could not trade. So sometimes you have to, it's like Indian way of bargaining. When we go out and buy something, we bargain a lot, right? We don't accept to pay higher prices. So treat the market in a similar way, that I want to get in here at this price. If I don't have FOMO, first of all, because even with a good entry, you can make a loss in this market, guaranteed, even with a good entry. And forget about having a bad entry and hoping to make profits. It can occasionally work. You try to chase something, it can occasionally work, but most of the times you need to have the discipline. And a lot of our trades are this way, where we give advance notice that this is where we want to short, this is where we want to go long. Unfortunately, nothing worked on that day. But the good thing is account did not get blown away, right? But so far in the current month, I will be honest, I have not at least had great trades. I had a couple of losses, mainly because of this chop, that we have seen with no clear trend up and down, and holding positions overnight in this kind of market is a little bit riskier. And that's what happened eventually. But I want to show for the month of November. So somebody said, how do you make sure that you enter or take profits, hold it on for longer so that your profits are more than the losses you make, right? So if you see the option trades in November, I had very few option trades actually for the entire month. This is what I traded. And if you see the success ratio, only 3 success trades and 2 failures. But you need to make sure that when you are successful, you are making a lot more money than when you're wrong. That is the only way to keep your account positive. There's no other way. Okay, so overall for the month, I ended up with this one. This is again assuming a risk of around 500 for each trade. So depending on what kind of account you have, you can multiply this and see. If you want to risk, say $2,000 per trade, then it is multiplied by 4 times, almost $4,000 profit. So doesn't matter what kind of account you have, you need to have your position size correct, and don't average down a losing trade. And this is something that I have learned the hard way. Your stop loss, okay, one more thing that some of you said is where to have stop loss, and stop losses will usually get hit, right? Let me go back to Tesla, because if you had bought even a leap, and if you keep on holding it and cost averaging 250 strike leap, it is not at all good. Okay, to put it in a nicer way, it's not at all good. You need to know your stop loss should always be based on the chart, not on the option legs profit and loss. If you see, if you see that, okay, I'm going to have 50% loss on my option trades, I will guarantee you your account will be negative, because in option trading, that 50% stop loss will get hit within no time. Your stop losses should all be mental stop losses, that, okay, I'm going to exit if my option price loses 50%. That is a good discipline to have. That's a mental stop loss. Another kind of stop loss that you need to have is based on the chart itself. If Tesla closes below this, doesn't matter whether my leap calls are at 80% loss or so. Sometimes you have to take the loss. There is no other way out. You have to take the loss. Otherwise, you are going to put more weight on a sinking ship. If you put more weight on a sinking ship, the ship won't survive, right? You are going to waste your money. So you need to have a mental stop loss. That is one thing. And second one is, stop losses should always be based on the chart. Otherwise, I can guarantee you that you'll make losses in option trading. So if we are taking futures position, and say, even if you are trading, like Nick said, he trades SPX most of the times, and he looks at ES chart most of the day, right? So if we close below this level, and say if Nick is bullish, would you think he will continue to hold it? No. I mean, maybe the point, he might hold it just to reduce the loss. That is okay. Sometimes you can get a small bounce, and that will be an exit opportunity. So you need to minimize your loss and exit. And it's easier said than done, because I myself have not been able to do it in the current month. But that doesn't mean that I'm a bad trader. Don't have that burden on your head, that negative attitude that something is not working out, or what am I doing? So it is okay. It's okay. Take the loss like a man, move on. Right? There's always another trade, and one good trade is what you need to fix all the wrong trades. And in the month of...
Can I ask a question there?
Sure.
Yeah, I was wondering, so you mentioned about, especially in the options, like you provide 30-40% loss. So it is likely going to be hit. So you pointed out about, so better be on the technical chart part of it. But is there any way, can we set up like anything, SPX or Tesla? Yeah, if the chart, the ticker price goes to here, then I want my option to be closed. So is there any way we can do that?
Yeah, definitely. There is, I think Thinkorswim provides that option. I think we had done that in the past, but I think maybe that will be the topic for another day. I don't want to get into it. It's pretty complex. You have option.
Yeah, I don't need the details. Is it possible?
Yeah, you can close positions based on the underlying stocks value.
Okay. Yeah, I didn't try that yet.
So I would also say this, that when you are trading options, so I tell the group that, hey, because there are some people who like to put stop losses, right? So I try to get, I try to calculate the theta and all that stuff on how it would impact, and try to give them an approximate price at times when I can. So reasonably speaking, I personally just look at, I always tell them, like, I will never say any price on SPX. Any price that I always say, it will always be ES, and that's the only thing that I focus on. That's it. I don't care what SPX does. I look at the differential. I keep an eye on what the difference is between, like currently, I think it's about roughly 30 to 32 points between ES and SPX, but and the gap will narrow down as the futures kind of roll out, it's time to roll over. But I like to keep a mental stop that, hey, if I see this this closing under this level on a 15-minute basis, so that's when I'm going to make my decision whether, you know what, like I think this is a loser, cut this off. And there might be some times that it kind of might just completely reverse, and then at times it gives you it will give you a small bounce to kind of reduce your losses also. So I would rather not just get stopped immediately. I would like to have a visual like, hey, okay, my 15-minute candle is closing here, or a 30-minute or an hour candle is coming close to this point, it's closing. You know what, I'm exiting this trade. So the second bounce I get from that point, there will be small retracement of, and because I know what the price was, I'm going to exit. So I usually get bad exits also because I make sure that my group gets alerted on time as soon as there's time to exit or when I'm exiting. Now, there are positions that I just let it expire because XPX is cash settled. And if it's only like a $10, $15, $20 left, I personally don't care. I still tell people like, hey, you want to close this off. But that's their choice. I just let it go. Sometimes it's not worth my commissions to go through closing all these, but either way, but yeah, that's, so it's not always just a black and white, because volatility could drastically change the option price even for a quick second, and you'll get stopped out. The move completely reverses and you'll be like, oh, see, I got stopped out. That will happen.
Right. So make sure that your profit is more than the loss. That is the key, right? You need to take profit. That is the only way to grow your account. You have to take profit even when you don't need it. So getting into a habit of taking profits is really important. And also, when you're on the right direction, try to at least maximize your profits. So if you see here, the futures trade I did in November, I lost 4 points in ES. ES did not work out for me, but in NQ, I captured 1,000 points in total. And each point move is $20. So if I had traded NQ, it would be $20,000 profit. If it was MNQ, it would be 1/10 of that, right? And if you see, this is not great. If I show this to somebody, I had 7 successful trades and 5 failures. This doesn't look all, and 1 break even. This doesn't look all that great, right? But the magic lies here, where when you're right, you need to make sure that you're really making use of it, right? That's the only way to grow your account. Hold it for longer when you're right, but also taking profit is also, I might sound like I'm contradicting, because you need to at some point take profit. But this month has been really bad. I have not been able to take some of the profits at the right time because the moves happened before market opened. With this CPI number, this big candle, if you see here, a couple of days back, I think this the high was made at 9 a.m. or something, and during the day it continuously fell. So I couldn't make use of some of the bullish. Even though I had bullish positions, I couldn't take profit at the right time. That happens all the time. That is the market, right? But that should not happen regularly.
Nick, one question. You are mentioning SPY 3000, right? I mean, that is based upon SPX. I mean,
ES. Sorry. Yeah.
So that you are expecting based on the Fed doesn't pivot next year, next March.
They already said that they are going to do everything that they can. Pivoting is not going to be. I'm telling, like, okay. No matter what, you have to understand, and this is I don't really want to go into the macroeconomics of this, but like you have to start understanding that there's too much money that was already there that still needs to be extracted. The market just showing the strength that it just did just recently is going to bring the Feds on stronger, if nothing else. So you may see some rally, this, that, and the other, but to me, like I don't get me wrong, I have bought positions, right? Everyone knows and I've actually given like what my entries are. So I already have working orders for the stocks that I want to buy at certain points, and I'm scaling in. Like Facebook, I only bought like a like 25% position on Facebook, right? So and I bought it at I think 95 or yeah 95, and then Amazon I bought it at I think right around that same price, but and then Baba I bought it, I actually jumped the gun on Baba. I bought it at 61.48. I wanted to buy it under 60, and I think it reversed at 58 or something. So and then I have Chewy, I bought it at 27. So there are things that I have already bought, and I'm kind of buying in based on how I personally see value. But just because, so this is the way I'm kind of looking at it, that just because the ES or the market goes down to 3,000 doesn't necessarily mean that every other stock that you want to own on that day is also making a new low. That likelihood is that that's not going to happen. Some of the stocks are already going to make their previous their lows, or maybe even all-time lows or whatever that may be, right? For lows for that time already, and they might come back down from where they are, but they're still not going to go to the certain lows or new lows with the market going to new lows, because there's still value in some other equities that needs to be kind of drained out. And those are the ones, like if that's what you're interested, you can wait for it. But then there are others which you want to maybe scale in. Like scaling in is the proper way to buy it, unless you just don't care. It's like, hey, I don't care. I just want to buy this. I'm not looking at it for the next 30 years. Then sure, buy it. If you believe in the company and whatnot, based on whatever your fundamental research says. So, but yeah, that's and hopefully that helps. That's all I'm going to say.
Yeah, I mean, there are too many variables in macroeconomic things that are going on, right? Yeah, nobody knows the bottom. You're right. I mean, scaling in is the right way.
Yeah, and that allows us to be wrong also, right? I may not get 100% of my position on Amazon that I want to build, or Google or anything, but then even if I have 50, then that's fine. I mean, I might kind of start averaging on the dips if the bottom is already in, and if the market is changing direction. I'm not completely losing out of it, right? Like I'm not completely just hey, I have absolutely nothing on hand. So scaling in is fine. I mean, just because you are looking, just because it looks red, just doesn't mean like, oh my God. And to that point, also, you have to understand. So with the stop losses, Pradeep knows, and Pradeep can tell me like, dude, how are you going to buy Baba, because you are the one who always told me like last 2 years, don't buy Chinese stuff, right? And I'm here like, hey, I bought Baba, right? Like I literally, someone messaged me like, hey, are you buying this? It's down 15%. I was like, what? So because I didn't have an active buy order on that, so I was like, yeah, I'm buying. So I bought it. The reason why I bought it also is basically just the whole risk on buying something. So I personally saw value in Baba at 60 or under. Now, my value loss would have been roughly, a 10%. So like I was willing to lose 10% on that. That if it goes 10 more percent from that price, I'm willing to cut my losses. So I bought 100 shares, nothing big. So at $6,000, I'm losing $600. $600 loss is not going to, make it or break it for me. But that stock already ran to like 52% in profit. Now it's down a little bit down again, but it's still above 40%. So to me, like I'm capturing 40% with a 10% risk. If that makes sense. So at some point when you see like, okay, at this point, this is value. Can I lose more money on this from this point? Yes. But am I looking at the like forward looking, okay, well, this is where from this point, this is where I see that this could potentially go. So I'm willing to risk this much money on this, and I'm okay taking this much loss. That's just as simple as that. That's especially for stocks. Options still different, but for stocks, it can be simplified to this way that, hey, this is what I'm willing to do. Right? If it's a $12,000 stock that you're buying, how much upside are you looking at with the downside risk that you are taking on it? So you just kind of have to understand where, and that's how you decide your entries, right? Like I literally have waited 2 years, so I couldn't miss it. I wish I would have put more money on it. But anyways, it's in hindsight, right? Like, hey, it's a success. That's why you wish now. Sure. Could be said.
Nick, another question on that. So there's this school of thought, right, which says you should always stay in.
What's that again?
There's another school of thought which says, you want to stay in for longer time if you're in there. Don't worry about whether it goes up or down, you want a long haul. What does that mean, and what is your thought on taking some profit at some point of time, or whether like you do 200, if it reaches 200 MA, you want to get out?
So you have to define your own long term, right? To me, there is difference in a separate account, right? There's and a lot of people, in my opinion, kind of make mistakes there, where they use the same accounts and they treat everything as the same. If, for instance, long-term trading, short-term trading, like or like basically like day trading, like trading options and all that stuff. So when you are looking at long-term, you have to define your long-term view. Like, what are you looking for? Like, are you forward looking to 1 to 2 years, 3 to 5, 5 to 10? What is your outlook on this? And at some point, if you look at anywhere from 8 to 12 years, you're going to see like this kind of market, downturn. And then when they're like, oh, it always happens, why it happens? Well, people need to take money out at some point. Some money needs to go. It can't, like, even if it wants to continue to grow, so it's like, hey, I think it has reached a potential that, like Baba, I probably will hold it for some time, because at the price point I've bought, right? And then I will continue to generate money on it, in sense of, I'm not selling covered calls right now. I didn't sell covered calls when it hit 92, even though I was so tempted to, but I'm like, no, I'm not. I'm going to hold it until things start to stabilize. And once it's stabilizing, that's when I'll start kind of generating like, hey, okay, well, there's some kind of event coming, or it's in a chop zone. I'll start generating some cash out of it. And that's how I plan to, just utilize things. And at some point you have to make that decision. Like, do I let this go? Right? There are people who hold positions for years and years, and then they have been getting the yield from it, and and it's okay, and it might be worth it. After a certain time, they might be at a place where it's already kind of like free for them, those stocks. So why do they care? Why not continue to hold? And their cost is so low. So it depends, but you have to weight your account into what categories that you want to try to put in. I am not too big into individual stocks. Those are the only few stocks that I'm willing to buy. Everything else, I am keeping like VO simple. Like, I have 5 stocks that are, maybe now the list has expanded to 8, but out of the 8, then the other 3 of them would be like minor, like, $10,000 or under. And Baba is one of them. But rest of them, like where I will have higher allocation of my my total portfolio, they're going to be the standard, you know, Berkshire Hathaway, Apple, Microsoft, Amazon, Google, like, and then Facebook is also the part of the smaller portion. I'm not too big on this. So it's just, this is something that you have to do on your own. Like, I can tell you what I am doing, doesn't mean that it's the right, just so you know.
Yeah, so I was looking, no, I completely agree on that part. I was looking more on like, last year was pretty good. And when I say long term, for me, it's like, as long as from the charts, I can see that it is going to keep going up eventually. I mean, of course, there's going to be always ups and downs. I was more trying to find out, it's like, what happened? Why couldn't I book my profits in 2021, right? And then everything came down to whatever it is. It's like, should I have looked at 200 MA? Should I have looked at things like that and said, hey, you know what? It's time to cut. It's some trade, but it's time to cut some of it out and things like that.
Yeah, so that there would be those kind of times, and that's kind of like when everyone is being greedy and everyone is just like, oh man, we are going to the moon. And that's exactly when you start scaling. When you hear that, going to the moon, all these crypto boys just pumping it up, yeah, that's your sign that you're coming pretty close to the top. You'll never be able to catch the top. I mean, very few people would, but it's just that you start scaling out when you can tell. Now you have seen what 2020 looked like, right? Or like what 2021 happened. So you will know, like, okay, these are going crazy. Like right now, there are companies who are extremely undervalued also. But guess what? No one is going to look at those companies right now because everyone is just like, oh, market is dying, this, that. And then there are people who are going to start accumulating those companies for the long run. And they are the people who would be like, okay, now this is extremely overvalued because this is trading at, the industry X is the 20X for this. And now this is already trading at 40X. Well, I don't want to hold this. That, guess what? Can it become 50X? Sure. But it's kind of like that greed is the human nature and the psychology that we all have. It's like, oh man, I didn't catch the top. It went to $1,200 and I sold it at $1,000. Then you know what? If from $1,200 it comes to $1,100, you're like, you know what? Let me just get in this again, and I'm gonna go. It might even go a little bit further, and that's exactly when you crash and burn. That greed is always going to stop you from taking profits. Trust me. That's why you need to have an exit plan, that this is where I am going to call it a day.
Yeah, profit is not profit until it is booked. So it doesn't matter whether it's options or stocks, right? And the whole concept of buy and hold forever, the hodlers, hold on to your dear life, that those people have been burned the most, right? Especially after seeing huge profits. And if you don't take that, it really hurts. Who would have thought Netflix would fall from 700 to 100 and change, right? So, but yeah, I myself had to book loss on Facebook. I was overly bullish on Facebook at a wrong time. And after their earnings, it didn't even give me an opportunity to book a loss properly because it gapped down. But guess what? When it came to 120s now, I have sold it. I'm out of Facebook. Sometimes you have to hold it just to minimize loss, but you should know that in the bigger scheme of things, it's a broken chart. And broken chart can remain broken for 2-3 years. All right, but do you have that much of holding capacity? You need to ask yourself. Otherwise, don't be in that.
Okay, so going back to my NQ, do you see that I'll have an opportunity to exit 11.9 anytime soon, or I am in for big pain?
What is your entry price?
11,900.
11,900. Okay. I think I gave, were you there in the first initial few minutes of the session today?
I was
Otherwise,
not.
I can send the recording. Okay, I'll send the recording. You can watch that. I think we might see a small bounce, the Santa rally, if at all we get it. If we don't get it, I think you should just book the loss and exit. If we get the rally, you should still exit because at this point you are just trying to minimize the loss, not to make profit.
Where do you see the potential going up to what 11.6, 11.7?
Okay, I actually had to step out, so I'm not in front of my computer now. But 21 EMA on the daily, you can see where it is. That would be an ideal exit point for NQ.
Thank you.
No problem.
So, Nick, one question I put on the message chat. When you talk about saying, "Oh, we do provide this alerts and exit plan and all that," I didn't see there in the snapshot. Do you also give a thought process behind that entry and exit plan, or is it just numbers?
I can answer that. Yeah, generally we avoid posting charts during the trading hours because we ourselves are trading plus our regular jobs. It becomes hard to give an explanation as to why we are doing something. But after market hours, yeah, we can definitely discuss about those things. Otherwise, during regular trading hours, it will be just numbers.
Okay. So that was going to be my follow-up question. Kind of you alluded to it a bit, but then do we do a what do you call as an introspection session or something like that over the week? It's like, oh, we took this trades. This is why we did it. It worked, but or it failed or whatever it is. So basically, I'm trying to see it's like.
So yeah, I think these kind of sessions are meant for that. So like I explained, my alerts on Friday why it did not get filled and I canceled my order. But had I kept it, I would have made money both on the way up and on the way down. Yeah, these are the sessions for introspection and to see why we did something and what else we can do.
How often do you do this? How often do you do these sessions? Is it every week?
Once a month. Once a month.
Okay.
Pradeep, going back to the NQ for a moment, do you think I should, I have the capacity to average. Should I get in around 11.2, 11.3 where it's right now to average out?
Yeah, that gap fill area should be your stop loss. You can average it. I think in ES, we are not that far away from the gap fill area. Your stop loss should be slightly underneath. You can cost average here. Let's see how futures open on Sunday, right? Let's see that. If we fill the gap and hold, we see a rally.
Hey, so sorry, I had to step away. But so another thing about this is something that when you guys, I know a lot of you are already from our regular group, and then some of you are not in the group, but if you do and when you do join the group, this is something that you can learn from Pradeep. So, and I know he probably didn't say this, so that's why I'm saying it for him. That you need some of the things that you said about the entries. You need that patience, because I feel like even in our group, there are people who, like, from time to time, that they have an itch to just like, hey, do we trade today? And then like at one point I was kind of getting carried away with them, just to be like, oh, they want to trade, let's find a trade, so when you find one, when you keep looking for one, when there is not one, then you kind of find the one which you don't really want. And so the key is to also have the patience to sit there and wait there for it to come to your price rather than you going after like, oh, you know what, I'm just going to go buy it. There are times that you might have to just do it, but wait for that. And when you feel like, oh, you need to buy it, give yourself another 1 to 5 minutes, a minimum 1 minute, even when it's like a short-term trade. And then you kind of make a decision whether you now you want it or not, or whatever the price it is, right? So that's one of the biggest things you can learn from him, just having that patience, just sitting there. Like I do it too, but then sometimes I lose patience, so I just buy it. So but me but so I'm also learning.
You're being too lenient on me.
But no, I mean,
it is hard. I mean, sitting on your hands and doing nothing, especially when you have the money in your account and you have everything in front of you and not trading, is an art we all need to practice.
Yeah. So another thing I wanted to just kind of touch base on, because there are people who ask like how I posted something in the paid group about, just making sure that I'm able to enable them to trade based on just the information that have been provided to them. So Pradeep, do you mind sharing like your screen, our Telegram group for?
Yeah, Telegram. Let me check whether I should be able to do it on my phone. Just give me a minute.
Like the alert.
I think you need to make me the host again, Nick.
Oh, you are not the host. Okay, well, let me see if I can do it then. I might be able to just do this. Actually, I'll rather just make you the host here. Here, you are the host now.
Okay, let me try it. I still see that only. Okay, Nick, I think you might see 2 Pradeeps there. Because I have currently joined on my phone and I still have my session on my laptop on because I'm recording it from there.
Oh, I see.
So can you make, oh, now, okay, now it's a bummer. Okay, you take it back. That's good.
Okay. What do you want me to make the?
Make the other Pradeep post. Okay. Not the one who is recording, because that's my laptop.
Yeah, that's fine.
Okay. Can you see my screen?
Yeah. Okay. So
let's go to the alerts.
Yeah. All right. So
what do you want me to?
Just scroll a few up, and then like the things that like in the morning that we post about, just the targets and the levels that we have.
Yeah, if you see the last post here in this screen, this is kind of the levels that Nick usually posts, and I occasionally post for NQ.
This was a late post. I usually do have some write up. This was like I literally woke up not feeling so well, and then some above up. You can scroll. Okay, something along this way, right? So this was I try to do it before the market opens, and sometimes even at night. So like you already have it. And so someone had asked me like, hey, how do we do this? So this one is only just the downside target.
Right there.
I didn't really care for the upside because I wasn't expecting any upside move. But Pradeep, you want to scroll a little bit higher? Maybe. Okay, there we go. All right. So this is something that we already had before the FOMC, and that this is where we were like, hey, if we trade above 40.70, that we are going to target the upside, and if we trade below the key level, this basically means that depending on where we are, right, when after the market opens. So this is all in the regular trading hours. So, and if you see like, hey, this is my that 41.20 FOMC or something, just kind of before FOMC CP, I had already blown through to what 41.80, which we also had talked about way before, that would be like a critical level. And then but even on that day, I posted something about that I was actually confused for the first time that which direction that I would want to trade, because okay, well, sorry if I disappointed you, but even on that day,
if you're not speaking, please go on mute. Thank you.
So the move happened beyond. So so I provide the weekly extreme targets that is basically saying that in a week, if we get there, that is the level it's an extreme move, and it's an extreme resistance. Can we go past it? Yes, but if we go that, it's more so of the contrarian trade. Like if we were above 41.10, we should have been shorting rather than trying to continue on the long side, or stay away from it. At that point, we were like I extended, for example, on the downside targets, I said 40.35, 40.20, and that's like a scale out also, that hey, this is the level when if you have three things or three contracts, this is where you can scale one out, second out, and the third is like up to you. I personally don't like, and I tell them the third target is the target that you should go, because when you start going into the fourth target, you are now stretching too much for that day. So same thing, and now can you roll back down into the December 15th? So like further down, like Friday, or essentially. So when you look at this, for that day, 39.85 was an extended target. I don't remember where we closed on that day. I don't think we closed below it, but Pradeep, can you go scroll down, or yeah, keep going. Okay, so this is where it was. Okay, so I was no, stay there, go back up. All right. Go back up.
Is this where you want to be?
So basically, the target was about this next day target was about 75, right? That the 75 or 70 was the third target, and we already opened at like close to that target. Even though I know better not to trade, I still ended up taking a trade. Not this one. This where we booked profit. But below that, scroll further down. Much after this. Go ahead, keep going. Or maybe in the other one. Or maybe there's a lag. Anyways, so essentially there was yeah, there you go. That's just right there. So it says like late morning extreme target was this, and the last target was 38.75. That was the last target that I had on ES. That means that was like if I was to break it down into 3 layers scaling out, the 38.75 was a third layer. Now, if you go back and look at it where ES closed at 4 o'clock, it was at roughly at 38.77. So at this point is when I caution everyone not to continue going on that side, or if you do go, it's with caution. So even though I posted a trade after that, I posted a trade, but it was an optional trade. So it's kind of like you have to understand that when the third target is hit, we know, or at least in our group, they know the third target hit. Now you are risking significant. Your risk is significantly higher than what it was before. So you have to be kind of very active. So anyway, so we do try to provide this, and they're usually pretty accurate, and all those levels usually do get bounces throughout the day. So even for the ones who are scalping, you can scalp that way, because scalping is not something that could be done by alerts, so on and so forth. So just kind of wanted to give you guys a glimpse, and for those who decide to join us later on, so you kind of have an idea of what things mean when they are posted. But yeah.
Yeah, this partially answers my previous question. Thank you.
Okay.
Hey, Nick, I have some questions here.
Okay.
So, do you provide day trade alerts and swing trade alerts, as well as scalping alerts, or what kind of alerts do you provide?
So once again, so I myself have not been going into swing trades. I did have some swing trade positions, and we have one of our friend, Mr. Dushyant. He actually closed it. We entered it at like around $500 or something, and there was a swing position that he, I think, exited 3,000 something. Anyways, I myself exited a little bit early, but then because I had a significant amount of other positions also, so I had to trim on that position. He ended up holding it. It actually went up to a little bit over 4,000, and I think he sold it at 3K. So I have had few swing positions myself, but I am more so on a day-to-day basis. Pradeep does do swing trades for options and for futures, but then once again, you have to, based on the amount that you have to kind of adjust that also. But he does notify that this is an overnight position, or this is this is a day position that we are getting into, and we're going to close it regardless before the end of the day, type of thing. So we do all, and like stocks also, but stocks I don't really post, because then there is no real way, unless I'm planning to just sell the stock like within a short time frame. But I do let people know that, hey, I'm buying this and I'm holding it for long term, type of thing. When I buy it, it's not like an official alert per se, but I do let them know for whoever is interested in buying that same equity. Either they can track it, or they can add those positions if they choose to.
Especially if you don't have $25,000 in your account, trading futures, day trading that is really beneficial, where you don't have the restrictions of PDT, right? So these are some of the ways you can get around and still try to trade. Instead of options, you can trade futures.
Yep. So, well, if there are any questions, I think we kind of have window at the 2-hour mark here. Then I think we would call it, and we will post the link to join the group for free at the end of December. Hopefully you guys can join us, you know, at least for the month of January, and see if we trade, and we can, and hopefully we can start the new year making a lot of money, you know, on the right foot. Yeah. Pradeep.
And Nick, would you be posting this recording so we can just mull over it and re-listen?
Yeah, it's getting recorded on my laptop. Yeah, I will post it,
Okay.
but probably not immediately, but later tonight. I have some guests coming over, so I'll work on it at night.
Okay, thanks for that.
No problem. Yeah, see you all hopefully in the month of January.
Yeah, and you know, feel free to let other people know, and you know, tell them to join the group. We will be sending out the link, whatever, whoever your friends are that you would like for them to also make money with you, and yeah, and at the worst case scenario, at least the education. That we'll try to do a few more sessions in the month of January, and if I don't speak to most of you, happy holidays and Merry Christmas.
Hey, Nick, just one question.
Everyone.
If you have a name, you know, like education videos, would you please share that links in this group?
We don't. Pradeep actually might have some. We have done some recording before. I don't know if he still has them or not, but we will post them in our paid group. So right now we don't want to make it completely public. So if you join in January, and if Pradeep has them available, we can post it in that, and you can visit. That's not an issue. It's nothing proprietary, but it's just like, you know, we all know. I don't want anyone to know. Who knows? One of you might be my boss, you know, at work, and so on and so forth. So
no issue. Yeah,
so
we can say that in January.
Yeah, and also, yeah, and even if you don't have it, if there are any questions, like we have spent one-on-one time as well with some of the folks when they have very specific questions. We try not to, because then it's like, hey, we have 40-50 people, you know, we can't just cater like an hour to every single one. But if there are any specific questions that people have, there's not an issue, and we can cover and address those in the sessions that we do in the month of January.
Okay, thank you.
All right.
But thanks for this presentation. Thank you.
Yeah,
for
no
both of
worries.
you. Thank you.
All right. Well, thank you, everyone. And
Thanks,
I
Nick.
will
Thanks,
talk to you guys. Yep.
All right. Yep. Thank you everyone for joining. Have a good holiday season. Bye.
Okay. Bye for now.
Thanks, Pradeep. Thanks, Nick. Bye.
Yep. Bye-bye.